Good evening, everyone, and welcome to Crypto Pulse Weekly, our daily assessment and analysis of the crypto markets. So, without much ado, let's get started. I believe my screen is being shared. Yeah, it's being shared. So, yeah, let's get started. So, this week, as usual, we'll go through a couple of news items, and then we'll take a look at what's happening on the markets, have some look at fundamental analysis, and then we'll go through some technical analysis as well. So in terms of where we are, well, we're not in the we're not in the bear market like many people would want to think. We're just in a form of correction, just like the one we have back in the month of May. And shortly, I will demonstrate that on the chart, showing you exactly how we're yet to get into a bear market, even though many people felt that maybe this was the beginning of the bear market. I make bold to say that, contrary to our expectations that we were going to hit the end of the cycle in November or early December, this correction has practically elongated the cycle, either by design or by accident. So, if there's anyone waiting to understand whether the cycle is over or not, the cycle is definitely not over because we've not fulfilled certain conditions. So in terms of volatility, yeah, we did rebound back to 50K during the week briefly. Then during the FOMC yesterday as well, we almost touched 50K again on the news that the Feds are not tapering, at least not until the first quarter in 2022. So essentially, means the money printing continues. I'm going to talk about that later. In terms of regulation, the Russian central bank, there were some rumors earlier in the week that the Russians wanted to ban crypto, and then the governor of the central bank came out and said, yeah, that it's a complete possibility to ban cryptocurrencies. At this point, I think I've generally given up on central bankers because it appears they are equally bereft of ideas when it comes to digital assets. The same thing happened to the central banker of Nigeria. So the guy was going ahead and saying that it's a very easy thing to do, even though I doubt if they understand what the technology really is about. In terms of sentiments, we're still bearish. We've been bearish since we reached all-time high early in November. But I think we're about to come to the end of that downward spiral, if you will. And I'll explain that, as I said, on the chart when we get to the section of technical analysis. In terms of volatility again, yeah, we're still making lower lows, and that suggests that the trend is still on. Like the saying goes in trading, the trend is your friend till the very end. So as long as the trend is up, we can generally assume that yeah, the market is still going down for now. So in the light of that, let's just get into some top level analysis of what's really happening. One, we've not left the range of the September prices, which suggests to me that we're not really making a lower low on the very high time frame. I'll explain the time frame as well when we get to the charts. So because we're not making these lows on a very high time frame, like a weekly time frame, what that suggests is that we're just pulling a correction. So the way the market moves is like the waves of the sea. It moves forward 2 steps, it comes backward 1 step. As a result of that, many people get discouraged when they see that the price that was originally pumping and doing well starts to pull back. And because of this wave-like of sinusoidal, that's the better word, because of the sinusoidal pattern of the markets, many people get discouraged when the price tanks, not understanding that the price is tanking because it wants to leap forward. So generally speaking, we're still in the range of September's lows, and coincidentally, the exchange balances is still at a 3-year lows, meaning people are withdrawing bitcoins from exchanges to cold storage. So what you are seeing is basically a distribution pattern by market makers and not necessarily surplus as regards the available amount of coins. I need to write down what all the things I promised to say during the chat so that I don't forget. So I mentioned distribution and I mentioned the long-term lows. I'm going to explain that when I get to the charts. So this distribution pattern suggests that it's just the market makers, doing their stuff. Among other things, we also noted that hash rate is the rate of transaction processing on the blockchain for Bitcoin. Hash rate, as at last week, was just about 2 basis points from all-time high. Now, hash rate has reached all-time high. Usually when hash rate reaches all-time high, the price responds. Hash rate is a metric, an on-chain metric that sort of calculates, the volume of transactions. That's better. The volume of transactions being processed on chain. So being processed by miners. So hash rate has reached all-time high. Hash rate dropped in May because miners were chased out of China and they needed to relocate their infrastructure. I think about 8 weeks after that drop, or 6 weeks actually, 4 to 6 weeks after, many of the miners started finding home in Eastern Europe, places in the West, and some in Australia. So now that most of China's Bitcoin miners have relocated either to the US or to Europe, the hash rate has been coming down and coming up gradually. So now hash rate is reaching all-time high. Anytime hash rate reaches all-time high, you can expect that the price of Bitcoin is going to respond. And also, we are very close to what I call a legacy trend line. Again, I will show you legacy trend line on the charts when we get to the charts. That trend line held during the July 2021 lows. And we're not there yet. We've not touched that trend line, but we're very close. So at the worst case scenario, we'll touch that trend line and bounce. Given that we have other indicators suggesting that we are close to the end of the downturn as well. So in other news, Crypto.com have started introducing some NFT plays on the platform. So if you have Crypto.com app, at least if you have it in the UK, I'm not sure about other localities, you can see that there are opportunities to play some NFT games or do some, I don't know, some tasks. And then you're able to win different NFTs depending on how many you finish on that day. And some of them will say you need to buy so amount of crypto to get that particular NFT. But they started doing that, and there's a lot of things happening on Crypto.com. And as I've said, I've told you many times, I made a big mistake. Well, not a big mistake. I mean, I needed the money, as I always say at the time. So it wasn't a big mistake for Crypto.com, but for my Crypto.com holding at the time. But Crypto.com is positioning to become next Binance. That's what I can say. They're not doing it overtly, but from the moves they're making, I can see that maybe not the next Binance. It's something much more bigger. So last month or 2 months ago, I talked about them buying up the naming right for Staples Center in Los Angeles. So Crypto.com, Staples Center in downtown LA is now Crypto.com Center. And they've been sponsoring F1, they've been sponsoring NASCAR, they've been sponsoring almost every sports, every globally visible sports this year. So they're taking up space. What I'm driving at is, as a company, they're taking up a lot of ground. I won't be surprised one day we'll wake up and find out that companies like Crypto.com have bought a major legacy bank. But what they're doing now, actually, among other things, is setting them up to be in a very powerful position. They launched mainnet in February. Then it didn't make any, I mean, didn't make any sense. There was no noise about it. But over time, what they've done is they've launched Kronos, which is their mainnet. Kronos uses CRO token as fuel, just like the Ethereum blockchain uses ETH as fuel. And you can do DeFi on Kronos network using VVS Finance. So if you go to vvs.finance, I think that's the website, you can connect a MetaMask to it, download CRO and swap a number of coins on the Kronos network already. So they're positioning at various fronts, and I think it's just a matter of time before I think people are getting to know, especially in the US, people are getting to know them. But what I'm saying is that I will be against the next bear market. I will be stacking a lot of CRO, definitely, because they might, I mean, CRO might not go beyond maybe $4 or $5 at the peak of this run, or maybe even $3. But I'm sure that by the time we get to the next bull run in 2024, 2025, CRO will probably be in tens of dollars or even more. So it's important that you keep that in mind when considering your CRO portfolio. I'm not saying you shouldn't sell if you need to take profit, but just understand that there's some projects that are stronger than the others, and there's some projects that have the capacity to weather the bear markets. And I think this is one of them. One, because they've been around now, and because they've become very established and highly capitalized, and quite organically so. So it puts them in a good stead, along with the other major smart chain platforms like Solana, AVAX, uh, Polkadot, and Cardano. Yeah, I'm not too sure about them, but Solana and AVAX, they have venture capital funding. So definitely we're going to see some fireworks on those networks when we get to the bear markets. In a similar tone, Coinbase also is planning to set up a metaverse platform that allows its users to, play in the metaverse. So all this is pointing to one thing: adoption. Adoption is increasing, and as adoption is increasing, companies are taking bigger positions and making bigger bets to position themselves accordingly for the incoming adoption. So in another news, okay, sorry, I talked about this last week. I'm gonna explain why this is a major move in the chart shortly, because I said it. I think I've said it for almost 3 weeks now, but I think we're very, very close. We're probably on the verge of it. It has to happen in the next 2 weeks, and I'll explain. I'll explain why. One, because most fund managers take profits at the end of the year. I mean, by default, because they need to do their either quarterly reconciliation or end of year reporting. As a result of that, they don't usually have rollovers like they would have month to month during the year. And as a result of that, in the month of January, a lot of companies and a lot of fund managers have excess of cash. So what you see generally across board is that in the equities market, the markets just pump. Except there's a major catastrophe. Usually in the month of January, the market just blooms because there's a lot of money to go around, and hedge funds are looking for where to put money, money managers, pension funds, family offices. Everybody's looking for where to put money. It's the beginning of the year. There's a lot of money. Money has just been allocated. The budget needs to be expended. Excuse me. So because of that, January is usually a very liquid month across board in the equities market. So what we're seeing now is the market makers taking profit ahead of everybody else, making making the crypto retailers unhappy for the month of December. But what I've told everybody that's asked this, yeah, it might be a dirty and unhappy December, but you can be sure that January is going to be more than worth it, because what will then happen is the pump that should have happened in December will combine both December pump and January's pump to compensate for the decline. So generally speaking, we're in that position where we're less than somewhere between 48 hours, 2 days or 2 weeks to the end of this downturn. I don't think we have up to 2 weeks. I think we have probably like 2 or 3 days the end of this downturn, but we'll see how it goes. And another news, SBI Holdings. SBI Holdings, one of the biggest conglomerates in Japan. And initially, I think they invested in a particular cryptocurrency exchange in Brazil or Australia or Argentina. But now they've invested in another cryptocurrency exchange in Singapore called CoinHackon. And they created an exchange wallet as well. So when I say watch the money, don't watch the news. This is what I mean. Watch how companies and major, fund holders are positioning to apply their capital, and you can tell where the market direction is going. I was watching. I told you last week that I was watching. I think it was no, not Bill O'Reilly. Uh, Larry. What's this guy? Shark Tank's name. So I can't remember his other name. I think his first name is Larry. He's one of the Shark Tank guys, and he was saying that a lot of the Middle Eastern money managers and sovereign wealth that they're looking at how they can play in crypto, especially with things like Bitcoin and Ethereum, and they're just waiting, trying to see what the posture of the United States is, because of course most of the reserves are in the US dollar, so they're just sort of waiting to see how the United States wants to position before they start taking up positions. I mean, these guys have trillions of dollars to allocate to crypto. So, as it were, when they start buying, the market is going to shake. I mean, the market is going to shake big time, like very, very big time. Like it will be astronomical. And there's also there's been that debate about we might already have a bear market because um, there are still institutions and a lot of fund managers are yet to come into the market. I'm partly for that narrative because so if you take a correction, let's say from where we are now, we have a 5x or even a 3x, which is as a 120,000, and then we take a dump to 50K. The people that are waiting before when the market was at 40K will definitely jump in at 50K because they're getting it for a discount. And even if the market continues to go like that, we might just be having, 6 months up, 3 months down, or 3 months up, 6 months down, in between the tops and the bottoms till we get to another Bitcoin halving. And because there's a lot of institutional interest in Ethereum, I think there might be some, they call it flipping in the crypto world. There might be some decoupling of Ethereum from Bitcoin as time goes on. But we'll see how next year pans out. And I'm saying that because I'm thinking about the FOMC meetings I said I was going to talk about, and what the outcome of that FOMC meeting meant. FOMC meeting, of course, it always moves the market because it determines whether the Fed are going to peg interest rates, whether they're going to taper, whether they're going to increase interest rates. It always tells us the intention of the Feds, the US Federal Reserve Banks, on their monetary policy in the coming year or in the coming months. They've said a lot of big words, a lot of grammar, but really, essentially, what they're saying is we're not going to do anything. And even if we're going to do anything, we're going to kick can further down the line to Q1 2022, which is end of Q, like beginning of Q2. So that's why the market has sort of reacted the way it has reacted, because nothing has changed at the end of the day. If anything, what they've now done is they've stopped tracking monetary supply. One. So if you Google M1's monetary supply, you understand. I don't want to go into details of M1 monetary supply, but M1 monetary supply, meaning M for mango, one for the number one monetary supply, is usually an indication of how much money they're really printing. If you look at that chart I think that chart it got disconnected. I don't have that. I've shown it to you. That chart got disbanded yesterday because the M1 monetary supply now looks very ridiculous. It's been going on a small, tangential growth before, and all of a sudden, between 2020 and now, just goes parabolic. So now they've stopped showing it, meaning they're not going to tell us anymore how much money is being, or the rate at which money is being printed, essentially. Because with M1 monetary supply before, you can, pound that to MT1, you can have an idea of how much money is being printed by the Fed. But it has become so ridiculous that they're probably too ashamed to start showing it themselves. So that is gone off. So with that out, and with inflation no longer being regarded as transitory, as they were calling it before. Again, very big words. So what do you call it? Economic speak, but really no substance. Essentially, what they're saying is we keep printing money to keep everybody happy. That's exactly what they're saying. That we're not ready to solve any problem, or we don't have the capacity to solve any problem other than print money. Anyway, I'm going to leave that talk about inflation for now. I mean, like somebody said, if you bought sardine beginning of last year, you know that that sardine is worth 3 times its price now. So if you don't understand inflation, that's a very good example. Not even sardine, anything actually. Even here in the UK, I was giving an example of vegetables that if you buy kale from Tesco before or from Sainsbury, before they will sell it for like 76p. What they sell for 76p will almost weigh 2 kilograms or 1.5 kilograms. Now they sell it for 55p, like if the price has reduced. But what's inside that sachet is almost like salad dressing. It has reduced to like maybe like 450 grams. So that's the whole way of adjusting for inflation and look at it. So instead of increasing the price, what they did was drop the price and drop the packaging. So for the undiscerning mind, you're not able to see that the degree of the price drop does not match the degree of the net weight of the products. But that's inflation. It's always going to be there. And that's why I always say you can't keep your money in the bank. It's the dumbest thing to do because bank is not giving you any return for your value. And the government is printing money, diluting the value of the money you have. So it's a no-brainer. That's everybody will be responsible for their net worth at the end of the day because the government obviously is set to diminish everybody's wealth, to put it very mildly. I'll move on. I'll move on from moaning about the government. In another news, I had actually had interesting news. The guy on the right, yeah, looks like a very young guy, right? Yeah, he's a very young guy. The guy on the right is the founder of Tron Foundation. Tron is the Tron Foundation are the owners of that cryptocurrency called Tron, TRX. Tron and its offshoot Neo made a lot of people a lot of money in the last bull run. This guy, I understand, is Jack Ma's protege. He obviously has left China, has escaped from China, and in today's news, he becomes the ambassador of Grenada to World Trade Organization. So he has now moved from Justice Tron to His Excellency Justin Tron. And the reason I find it amusing that these guys, I mean, this guy, along with people like CZ of Binance, these are very, I mean, CZ is obviously, CZ is older, he's a much younger person. But this guy is one of the first adopters, and they're one of the first people that got into the idea of Bitcoin and crypto and everything. They were far ahead. Everybody are like the earliest adopters, and had built infrastructures and legal entities around this. And as a result of that, I mean, this guy is, I don't know how much he's worth now, to be honest, but it's probably worth much more than. Hold on a second, I'll find out now. Yeah, the guy is worth. Where is that stuff? Yeah, it's like top 50 richest people in crypto. And yeah, it's regarded as well, of course, not regarded. It's the biggest owner of Tron, the block cryptocurrency, and it's because it's had so much. And when they did the ICO back then, they raised $70 million. So I mean, you can imagine the gains they've had on top of the overall market capitalization at the time. So I mean, these guys have made, as they say, shitloads of money in the past bull run. So now what is happening is, and like somebody said, where I'm going actually is this: people who have become wealthy because of their earlier involvement in cryptocurrencies, are going to gradually start taking up the space in the power dynamics of the world. You can quote me and you can note that statement. People who have become wealthy via digital assets are going to be the Bill Gates and the Elon Musks of the future, because eventually money is going to fail. And when money fails, digital assets will be the only replacement. And at that time, most things will have to be calibrated. Digital asset like maybe Bitcoin and Ethereum. So people who are already been in for a long while, definitely they will be power brokers, as you can see from what crypto.com is doing now. They will be power brokers, definitely. Anyways, moving on. Where's my Kraken, for the guys in the US, you probably know this exchange. Kraken is a US exchange. They have a version of their platform that is for non-US citizens, but they're basically a US-based exchange, and they were the first to have the banking charter in, I think, the state of either Wyoming or Iowa. I think it's Wyoming, the United States. And they've been growing ever since they got that banking charter, because what it meant was that they could offer banking services and convert them to crypto. Even before banks, I mean, I covered this probably July or August last year. This was even before many of the banks in the US started talking about getting banking charter for crypto services. So these guys, they're set to launch their own NFT platform like OpenSea. For people that don't know, OpenSea is an NFT platform where people get to they create their own NFTs and they can sell it there. OpenSea serves as like what do you call it? Markets. Is it market maker now that they call them? But they provide the marketing platform, the market for both buyers and sellers of NFTs. So Kraken is trying to get into that, obviously, because NFTs are going to become very huge. And again, okay, sorry, for the purpose of people who don't know what NFTs are. NFTs are non-fungible tokens. Non-fungible tokens are just collectible digital assets. That's the simplest way to put it. And I've given examples of wristwatches. I've given examples of classic cars. I've given examples of works of art as unique collectibles that have value and that help people generally, both rich and poor, to store value. So now that we have NFTs and people are storing value in various NFTs, it's going to become a very big thing, because one of the major problems of people who are wealthy is how to retain their value, the value of their wealth. NFT provides such opportunities because, for instance, if you have a digital art that's sold for 1 million today, because there's no other type of that art, it's unique and can be verified on the blockchain. It means that the next time you want to sell it, you're the only one that can determine how much you want to sell it. As a matter of fact, the amount you are going to sell it is going to be the amount anybody is willing to pay for it at that point in time. So, for instance, there is, just to give you an example, if the original Matrix movie was an NFT, I'm just giving an example now, and they have now done Matrix 2, you know that the original Matrix movie would be worth much more than whatever it was sold for back then. One, because people will now develop interest in trying to find out what the prequel or what happened before the current Matrix movie that's coming out in December. I think it's already out in some places. They want to find out, and as a result of that, people get interested in knowing what that is about. And if it was an NFT, of course, it will sell out. So in the same way, digital assets or non-fungible digital asset, let me put it that way, also known as non-fungible token, provide that storage of value in a unique way, because it is what you call it that it is. So if I did an NFT, for instance, of let me look for something, an NFT of Fela Anikulapo Kuti's saxophone, his original saxophone. What it means is that I'm the one that owns the digital certificate of that saxophone. And maybe I have the physical one, I bought the physical one. Because I've put it on the blockchain, if I want to sell it, I'm the one that has the right to it. It's like a title deed. It's like a title deed of that saxophone. If I have it and I want to sell it, I'm going to sell it at any price I want to sell it. And the buyer is going to buy it at any price I want to sell it. So because of that, NFTs are like the newest, I don't want to call it fad, innovation, drawing people into crypto and making people interested in really finding out what this thing is about. So that's why you have like yes, I told you before, crypto.com is trying, these guys are trying to launch their NFT platform. So it's definitely going to be, and another thing with us is that anybody that is born before 1991, anyone that's born before 1991 is generally not a millennial. And anybody that is born between 2000 and now, they were born essentially into digital world. They weren't born into the worlds of rotary telephone boxes or telephone booths or telephone wires or VCDs. I mean, I was trying to explain to my children what VCDs and DVDs were. I mean, I couldn't even go as far as to talk about vinyl and floppy disk. So the world is changing extremely, and the newer generation of people or younger people, they're essentially being born into this digital world. I mean, they're growing up with mobile phones, exposed to screens. I mean, they can't even fathom that we were not allowed to, or the TV didn't work before 4 p.m. when we were growing up. So because of this, many of them have been exposed to, the gaming world from very young. And it's almost like they have dual personalities or dual experiences of life, one in real life and one in their games. And as a result, they're already familiar with the concept of NFT because they use their parents' credit card to buy, in-game tokens all the time. So for them, these innovations are just going to be normal. Like I told somebody, the flexing in the future won't be how much you are worth in stocks. It will be how much NFT, how much money your NFT or tokens, bitcoins, your NFT is worth on the blockchain. And that will be the flex of the future. So this is huge. I'm not talking about NFTs today. I just made a diversion into that to explain to people what NFTs. In another news, Myanmar adopted Tether as its national legal tender. Um, Myanmar has been a really battered country, and much can be said about many of those countries because when you trace back their problems, many of their problems are linked to one or two Western countries trying to foment trouble in those places for their own advantage. But I'm not going to comment about Myanmar, but it's been very, very destabilized. It's just like having a Venezuela situation with war. So it's like being in Venezuela and then being in a state of war. That's exactly what's happened in Myanmar. So they decided that, well, since their currency could not, stand, essentially because the government is barely recognized all over the world, they're in a state of general chaos. There's ethnic cleansing. There's all sorts of wars going on there. As a result of that, they decided to adopt Tether as their national legal tender. Well, it's an indirect way of adopting the US dollar. So it's going to eventually happen that most countries will go to what we call dollarization. Many of the Caribbean countries, for instance, even though they have their own currencies, their base currency is the US dollar. So this is exactly what's happening. It's only that these guys have decided to go the way of Tether as opposed to waiting for central bank issued US dollars. It's a major step. And like I said, it's a major step in nation states taking positions in crypto. So the first one we knew was El Salvador, taking on crypto on their national balance sheets. Now you have Myanmar adopting Tether. And there was a very interesting tweet from president of El Salvador last week. So there's this Goldberg, I can't remember his name now. The man is, of course, is old. His name just skipped my mind. But he's a very popular gold person, he has an investment company. And he's always bashing Bitcoin and bashing Bitcoin and promoting Bitcoin over gold. It has almost become like a meme. And interestingly, his own son, is a real crypto buff. Like he's all in on Bitcoin. So they are always Peter Schiff. Yeah, Peter Schiff is the name. I just remember. Peter Schiff is always getting bashed that um, his good ideologies has become anachronistic. However, during the last week, I think it was during the last week, he decided to um, throw shades at when the price of Bitcoin was dumping hard during the week. He decided to throw shades at Michael Saylor, Anthony Pompliano, and Nayib Bukele. Nayib Bukele is the president of El Salvador. So he started yapping them that, so how far with your Bitcoin now that your Bitcoin is going to zero? So I don't think anybody responded initially. Then the president of El Salvador responded and said that well that it seemed that he's worried for. It was a very funny tweet saying that if they had $90 million, something like that, in gold reserves, that if they had bought Bitcoin when they bought that gold, that 90 million would be 380 million, something crazy like that. That's so he doesn't know what he's talking about. It was a very funny discussion. It's very interesting how Twitter can bridge the gap between the high and mighty. Anyways, in the same way, Tether also as an exchange currency reached an all-time high during this week. I'm going to explain that shortly on the charts. But you see, when Tether Holdings is at all-time high, it means Bitcoin is at all-time low for that period. And I will show you the charts. It's like the charts are like inversely proportional to each other because when Tether holdings are high, it means people have banked their money from Bitcoin into Tether. When Tether holdings are down, it means everybody is all in Bitcoin and pumping the markets. So it's actually an interesting indicator of how the market is feeling in terms of sentiment and in terms of trend. So right now, Tether is all-time high on the exchanges. Many people are ready to load the market. And the way the market has been springing up and down, I mean, in recent days, especially the last 2 days, it shows that yes, there's a lot of Tether on the exchange. It's ready to buy the dip. But people are buying the dip, and when they see that the dip is not rising, they're quickly exiting, so it's dipping further. So let's talk about a brief about what's happening in the market today. The overall crypto market has just lost about 5 billion in the last 1 week, which is very small compared to even average weekly weekly changes will be in the range of maybe like 20, 50, or sometimes 100 billion differences. But just 5 billion total market cap dropped and 2 billion, I mean 200 million in altcoins. So it shows that the market is not dropping further, I mean not so far away from uh, the bottom as it were. In terms of greed and fear, or fear and greed index, like I said, you can't go wrong with fear and greed index. Right now, it's one of the best buying opportunities. Of course, last week it went as low as I think at one point. If it goes again to below 20, I think it's probably the last time it goes below 20 before things start going up because there are other things that are building up for building up the case for a reversal in trend right now. In terms of where we are in the market, of course, in the short term, the market is here where people felt, I should have sold before the end of at all time high. But in the long term, I think we're still in the overall cycle for Bitcoin this year. I think we're still here, not yet at euphoria. And I've explained in times past, both with on-chain metrics and with sentiment indicators as well, how we're not yet at the top. When we get to the top, you will know that yes, we are really at the top. But we're not there yet. So let's talk about the charts, which I've been talking about or making reference on. Let's start from Bitcoin charts. I'll first start from the weekly. I think no, the weekly is better. Yeah, let me start from the weekly to analyze what's been going on. Let me use this one. Yeah. So this is the weekly charts. I need to draw this again, unfortunately. So if I draw from swing guide to swing low, um, when the market moves in what you call an impulse wave, either up or down, the general expectation is that a healthy move needs to have at least 50% correction in its move. So if you see what I've drawn here now, this 100, this is 100%, this is 100 to 0. So if it's gone from 100 to 0, which was the first point at which you corrected this year in April, and it came down in May, when it came down in May, it hit about 50, almost 57, 58%. So it's really done a healthy move in pulling back from the lows of March 2020 from a weekly perspective. Now, that is the first impulse wave. This downtrend is supposed to be like correction. The next one is the second impulse wave. Even though it has not gone so much further than the first one, the general expectation usually is that if you have a first impulse wave that pulls back like that, it's supposed to go much higher, probably in the region of either 70s or 80K. But of course, market makers need to make money ahead of everybody. So they pull down the market prematurely, and we're pulling down now. So what I'm saying is that if you look at this from a weekly perspective, what is happening is that we've gone into new all-time high by going to 69. We've pulled back, but literally speaking, we've not pulled back as low as the recent low. So even the recent low in September was 39K. We've not pulled back as low as 39K. As long as we don't pull lower than 39K, which is very unlikely at this point, we will still not have made a lower low in terms of price. And as a matter of fact, if we are considering if the price in September that was saying was 39, we are considering the actual close. The actual close was actually around 43. So as long as the market does not close this week below 43K, or let's say even below 40K, from a weekly standpoint, we're good. As a result, I think that one, we're still very much in order in terms of overall trend for the market. So, like you see, the trend is going up. It's made two pullbacks now. This second pullback is not as deep as the first one. This is the first one. And you can see that even the next pullback in September wasn't as deep as this one. But what I'm saying is, if this pullback does not exceed the pullback in September, which was 39,500, then we're definitely going to bounce. Okay. Let me put let me put yeah, this is a busy chart, but I will explain why this is a busy chart. So yeah. So I was saying that we were in a long trend, and that's we're close to a legacy trend. The trend line is generally a point to price the market. So this particular trend line, the lows of 19th of May and lows of now this trend line that was formed by these two lows has only been breached once. That was when the market tanked in the month of July. And immediately the market touched that trend line, closed below it. The next day, the market rebounded, and that was the day the recovery started from July up until the month of September. So what I'm saying when I mean that we are very close to legacy trend line is this is how close we are to the legacy trend line. From today's price, we're just about from today's lows about yeah, we're just about 14%, so about $6,000, which is 38. So this is the worst case scenario that this can have, and I don't think we're going to get there. So this trend line has been intact since then, and in all fairness, I think the dump in November in May was bigger than this one. So I don't think we're going to dump as low as 38. I think we're probably going to find the rest somewhere around 4,900. That's my projection. Secondly, we had another trend line from the 3rd of September. That trend line was broken today, actually. So for people who are looking to buy it, came very premature to buy it because that trend line was, the market is likely to close below this trend line, meaning that we still expect further downside. I think the market is probably going to be around either 45 or 43 today, eventually, before midnight, and probably keep going down. What will likely happen is that if we spend the rest of the weekend going down, we'll end the week or just before the week ends, we'll probably come back up here before we start going up. Another interesting concept or another interesting observation I made was that market makers actually they use chart patterns to sort of replicate market making. What do I mean? So I can't explain it. For people that are familiar with charts, I can't explain it fully on this call, but what it means is that usually they can just take a segment of the market, rotate it, flip it, and then print the price as the price feed for the next period. So the reason I'm saying that, I saw a price analysis during the week that sort of flipped this decline from here to here. It flipped and rotated it. So if you flip and rotate the price from here to this dip, this is what you get. You get a dip down here to like 40K, then it starts going up almost in the same manner. So it's not impossible. I mean, I've seen so many examples. The person who was doing the analysis gave some examples. I went to check the chart and I said, actually, that it's true. It might not be for the same time frame, but it sort of happened, interestingly, a lot, especially for Bitcoin. So this, among other things. So another thing that's, where do I have that stuff? Another thing that's obvious is what you call convergence and divergence. Convergence and divergence are like reversal signs. I must have lost it on one of the charts. So let me just put it back there. There are reversal signs that tell you that the trend is about to change. And usually what happens is the indicator's pattern is not at par with what the price action is telling you. Let me go to, I think I have it on. Okay, I have it on this chart. Sorry. This is what I was saying. So on the daily chart, it's not so apparent because the distances are small if you're looking at the daily chart. So I was just checking the chart before this afternoon. That. So if you take these two price points where I have this arrow pointing, price is going down. However, my divergence indicator is pointing up. My divergence indicator is basically a relative strength indicator with some divergence signs. So usually prints out this pattern, but it does it after the fact. I don't usually use it. I look for it myself. So this looks like an incoming divergence on it. But if you look at the 6-hourly chart, which is like a breakdown of this, you see that it's actually there already. So on the 6 hours, I can see that we have a divergence, and even the indicator is printing out full. I didn't even know that until when I wanted to plot it on the lower time frame. That was when I saw that actually the lower time frame was already screaming full. So in other words, what I'm saying is that, I mean, it's printed on 4 hours as well. I just checked 4 hours now. So what I'm saying is that we have very little time left for this price to play out. Usually for this to be perfect, just need maybe like a dip to like 42 or 43K, and then you have a perfect divergence. From that point, the market can start rebounding and will have a valid rebound because you already have divergence. Divergence is a major reversal, the major reversal sign on any asset. Actually, this is not related to whether it's forex, stocks, commodities, anything that has charts. Divergence and convergence are major reversal signs. So when I say that there is very little room left for this downturn, this is what I'm saying. Everything is the handwriting is on the wall. The biblical handwriting is on the wall. And as a matter of fact, if you take a look at the daily chart again, you see that we actually have been in this trend for how many days now? Price and dates range from 69. We've been here since I'll show you immediately. Yeah, from 10th of November to yeah. So we've done essentially we've done about 40 something days in this trend. So it's about time that the trend pulls back and either goes sideways or starts to go up. So people have asked me, is it so what's the next direction? Well, what I can say, what I can see from here is that the market is about to react. Definitely, the market is about to react. But we have about so this 5 day chart, I think was what's today's date? Today is 17. By the time this 5 day chart closes, definitely the market will have reacted one way or the other, either by going sideways or by going back upward. And like I said, if you combine what I've said now from a technical standpoint with what I've said in the fundamental analysis, that fund managers will generally be loaded in January. So we are going to have a pump of some sorts. And of course, the minimum you can expect, minimum you can expect from here is actually 70K. And I'll explain why. So because here, when we did that original projection to the all-time high of October, we had a correction there. And if you look at the charts, it shows that from the correction in July, the correction in October, on a lower time frame, we did an 100% impulse move. Then we corrected down by 50%. Then the market went all the way up, for a second wave. Now it's almost like we had a correction wave. So at the minimum upside we're expected to have from this bottom that we have now. Let me just drag this down. The minimum upside that we're expected to have from this correction is supposed to be somewhere in this region. We're going to pull out the chart so you can see. That takes us to the region of 90 something K. So if we plot that over the number of the next, how many days now? Plot that over the next, to plot back over the next, let's see, over the next 38 days. I expect that over the next 38 days or 48 days, the price should be in this region. Because instead of going further, taking this correction. So the next impulse wave that goes up definitely will take us to this region or beyond. Or at the very minimum, we'll sit around 70, 80K. So for people that are wondering, bear market over, are we going to bear market? Just calm down. Might not have the December you want. As I said, January will more than compensate for any bruises you might have in December. In furtherance to what I was talking about last week in terms of correlations and what drives the price of Bitcoin, I just want to conclude on that. Two other things that I found out, which I was talking about earlier on, was apart from the SPX, which is the stock market index, and the US dollar index, which is where is that stuff? Oh, I had it open. So there's a particular metrics called DXY. DXY is the US dollar index. It's almost like the benchmarking of the US dollar against the basket of currencies. It's a very interesting correlation because the DXY is inversely correlated with the strength of Bitcoin. So anytime you see the DXY going up, like you see the DXY going up now, if you check Bitcoin is going down. It's crazy, but let me shift to forward so that you see what I'm talking about. See, DXY is going up now. If you look at Bitcoin, you see Bitcoin is going down. So a very quick correlate is anytime you see DXY going up, I mean, automatically check Bitcoin, you find out that Bitcoin is most likely in the opposite direction. In fact, you don't need to look, just look when DXY is green, the Bitcoin is red. Another one that is directly correlated with Bitcoin is SPX, which is the S&P 500. You all know S&P 500, right? S&P 500 also goes opposite direction to the dollar. The reason we're having this correlation, by the way, just to explain, is because Bitcoin has now become an institutional grade asset. Because of that, many of the fund managers, institutions, are actively trading the price of Bitcoin on the equities market. So you have people like Bakkt and Chicago Mercantile Exchange that allows them to trade the price of Bitcoin in huge volumes. So the price of Bitcoin is now beginning to behave like the price of forex market. Like a pair on the forex market. Let me use that analogy. So anytime SPX is coming down, you can be sure that Bitcoin is coming down. Anytime DXY is going up, guaranteed you will see the reaction. If not immediately, almost immediately after, you see the reaction on the price of Bitcoin. And I mean, these are things I found out by the way, but it's important to understand these correlations and be, how do I put it, be guided accordingly. And that's why I kept saying that, the thesis of the multi-cycle or the super cycle Bitcoin cycle, sorry for the tautology, but there's a thesis that we might not go into full bear market, and we'll just be having multiple iterations of the bull run, is because of this kind of correlation. So because if you now have another boom, so let's assume that what's it called? Q2 comes, or Q1 2022 comes, and the Feds decide that, you know what, we're even going to print much more money. It means that, there's much more money to throw around for the institution. So the market is going to take a huge boost.
Sorry, we can't help you. They're quite. Oh,
sorry about that. So, but if on the other hand, the Fed decide that they're going to cut the interest rate and they're going to start cutting, the money printing, the market will immediately react. Like immediately, the market will crash because that means there's no free money going around anymore. So it's important to keep this in mind and know that Bitcoin now has direct correlation with these markets and will react accordingly. Another interesting metric, the last one I wanted to talk about was this one I was talking about earlier on. The market capitalization of, or the percentage market capitalization of Tether. Tether is like I don't want to use the reserve currency of the crypto world, but there's no better way to put it. So what people use Tether for, just to explain, or USDT for in the crypto world, you use it usually to bank profits. What do I mean? I bought Bitcoin at 21K or 27K on December 31st last year. Bitcoin got to 69K in December. I want to bank my profit without exiting the crypto markets. I buy USDT. Buying USDT, let's say I had, let's say it was 0.1 Bitcoin that I was able to buy there, which was at the time $2,000. So by the time I'm exiting markets, my 0.1 $2,000 is now worth 2,100. It's now worth almost 7,000. But I bank it in USDT. When I bank it in USDT, and I decide that I want to buy back when the price falls. So if for whatever reason, maybe there's a catastrophe somewhere and the price falls below the original price that I bought it, I now have more capital in terms of dollars to buy back because the USDT is tied to the value of the dollar. So because most people in crypto know this, most retailers in crypto know this, you can see this chart, this double bottom like chart is almost mirroring on the daily. It's almost mirroring the Bitcoin charts that also has this double bottom like, double top. It's like an inverted, so if you look at versus this, it's like an inverted form of the Bitcoin chart. So anytime you see this going up, that's definitely price of Bitcoin still going to be going down. So as long as the price of the amount of the percentage of Tether in terms of overall dominance is going up, you can be too sure that the price of Bitcoin will keep going down. So, but immediately the price of Bitcoin starts correcting, you see changes here. You already know about Bitcoin dominance. This one just helps us to determine whether we are falling into all season or time to just hold your Bitcoin. Right now, dropped twice, which suggests to me like you might not be getting into all season anytime soon. So you have a what you call it, a chart pattern called head and shoulder or inverted head and shoulder. Usually head and shoulder is a reversal side. I have head and shoulder somewhere. Yeah, this is a classic head and shoulder. So this is a shoulder, this is a shoulder, this is the head. Anytime you see this, guaranteed the market is coming down. Guaranteed. Exactly. This one is the shoulder, this is the head. This one is the shoulder, but it's not quite big. But if you drill down the smaller time frame, you see that actually you had a head and shoulder on the 4-hourly around. In retrospect, that's what it was. Sorry. So this was the shoulder, this was the shoulder, this was the head. So in retrospect, when you have head and shoulder, it's on the charts, the major reversal sign. It's indicative that the market is about to change direction. So for that Bitcoin dominance chart, that there's an inverted head and shoulder playing out on the smaller time frame here. I marked it out about 2 days ago. I was watching it out. I think I marked it when it was here, when the price was here, and I said it looks like this is about to play out. So right now we have the confirmation that this is playing out. 40% is like a supply zone for market dominance for Bitcoin. It's bounced off 40% now, and it looks like if it holds at this level and continues to go up, then altcoins are going to get wrecked for the next 2 weeks till Bitcoin recovers its losses from all-time high. So that's pretty much all I wanted to talk about today, and to just for people who are afraid to allay their fears that we're still early and the bull run is not over, so there's no cause for alarm, there's no cause for control. Everything is under alarm. There's no cause for alarm. Just me. So yeah, if anyone has any questions, yes, Dylan, please, it's your mic.
Good evening, Doctor.
Good evening.
Yeah, thanks for calming us down a bit, or let me say, for calming me down a bit, because I was so confused since last 2 weeks. But notwithstanding, well, I've even decided to delete my app, so and look away from the market, so I will not have IBP. So what I want to ask, is there any course one can go for? Because I really need to know about this NFT. How one can get the NFT, how one can buy it, how one can create it also. Is there any course for it or not? So that's my number one question. Then number two, according to the signal you gave us earlier, well, maybe I will not disclose the amount. So I just want to ask, the LTC up, are we still holding? Are we still good to the X that you said it will get to? And can that be January?
So yes, so I'll answer your question. Number one, I think I'll do a course on NFT now that you mentioned. I will try to put a course together in January for NFT. If anybody is interested in NFT course, please contact me. I'll do a course on NFT in January, just to help people with, if you want to buy and get involved with NFTs. I'll do that in January. If anybody is interested, get in touch. For the LTC up that I gave you, that LTC up target is pegged to Bitcoin's all-time high targets. Now that we've not gotten to all-time high and taking this form of correction, like I said, two things that the consequences of this correction. One, it means that this Bitcoin cycle, bull run, has elongated by this correction, because let me look for, I have a chart that I usually use to explain this. Wait, I'm not sure whether it's thread. So I have a monthly chart that I used to explain. I have a monthly chart somewhere. Let me check big stamp. Yes, so this is the monthly chart I used to explain how we know that we're not yet, that we're not yet at the end of so on this chart, yeah, perfect. So on this chart, I need to do the logarithm. On this chart, what I've done with this chart is to plot the weekly time frame trend for Bitcoin. And what this particular chart explains, because Bitstamp is one of the oldest exchanges, so it has data running up until November 2011. So if you plot the highs on this chart against, so the highs of 2013 bull run versus the highs of 2017 bull run, what you have is a trend line. If you plot the lows, what you have is another trend line. So there are two trend lines actually, one to the lows of February 2019 and another one to the lows of March 2020 during the COVID era. So if you look at this chart, what you find out immediately is that, and this is what I was saying there, that if we went up, so this is the month of November, instead of going up, the month of November has come down. That if we went up straight up, the way this chart was along this trajectory, the top of the market could have been somewhere around here. Now that we've not gone up in that trajectory, what it means essentially is that we could actually, so if we plot this forecast, sorry, if we plot this forecast now, we have more headroom. Basically, we have more headroom. Let's say, so this is March. Let me put it as 1st of April. We have more headroom to grow from where we are now to over 300,000. Before now, it was around 250, 242, 254. If we are going parabolic. So usually before the end of the bull run, you see the price go up like this month on month. So if we have this kind of parabolic run where the price goes up month on month for like 2 or 3 months back to back, what you have is you're likely to hit this ceiling. The day the market hits this ceiling, that's the end of the cycle, guaranteed, because the bots will see it by the algorithm. Market makers will know it because they can see this legacy trend line and everybody will start selling off. So at this point now, depending on how fast we go up, we are anywhere, we can't go up vertically, meaning we can't achieve all of this in January. If we achieve it in February, it will be around 370, 340 something. If we achieve it in January, which is almost vertical, it's probably going to be around 280 something thousand. So any day that the market touches this top, depending on which day we touch it up. So right now, we're pegging it to April 2022. If we reach the peak in April 2022, the price will surely be around this price. So based on that, the reason I need to bring this up is the question of LTC of that you asked. Based on that, when Bitcoin peaks out, all the other major odds, it's almost like they do a calculation of how much they need to go. So if Bitcoin goes from 40K now to 400K, that's 10x from current price. The reaction from the altcoins will be that each of them will start doing 20x, 15x. I'm not saying it's going to do 400x from where we are. I'm just saying if that was the reaction from where we are, all the other altcoins will start doing multiples of that. So LTC will definitely do more than that because the Bitcoin would have gone beyond 100K. So definitely, we still have that X that I told you is valid, and it's definitely going to exceed it because now we've elongated the cycle and given more headroom for the price to reach the upside, essentially. So it was almost like 2017, 2018 was to see how high the market could go before we formed the trend line. And it looked like once everybody got to 19K, everybody got tired and sold off. So we're going to continue along this trajectory. So what's been happening is we've been going up, taking a dip, going up, taking a dip. We'll keep going up and taking a dip till we hit the ceiling of this trend line. Wherever that happens is the end of this cycle. Now, it might not happen again. It might not happen in the next 4 months. It might actually go up until, let's say, July, in which case we'll definitely be in the range of 400 or 500. Now, it looks stupendous now, but that's what the charts say. And this is what the market makers consider in making their long-term pricing decisions on the market. So that one is inevitable, just to allay your fears, delay. And the best price to sell your DYDX, you don't need to sell anything now because Bitcoin has not made a significant all-time high. So what has happened is this. Let's put it this way. This all-time high was 63K. We went above it briefly, then we came back and got rejected. Now, if we make another attempt, definitely we'll go above it. Now, how far we go above it depends on how far the market makers want to market. Like I said in that other chart, we might push to 90K and then come back to retest 60K. If we push to 90K, for that period that we push to 90K, altcoins will react because it means essentially Bitcoin will have done a 2x from today's price. So major altcoins will naturally react, and then medium cap altcoins will then react. So for most people, I would say, don't do it. I mean, if you're already holding your altcoins now, there's no point selling them because what's going to happen is you sell them now, and January comes, and all the altcoins are misbehaving. I told you what happened to me last year, December, when I sold my altcoins. I sold Kusama at $22 or $23, $26. Kusama started doing 200 and something dollars. So you don't want to do that to yourself, really. Be careful how you sell your altcoins in this season, because if you held them now, then there's no point selling because there's still a lot of upside to the markets. The other question from Dio is it safe to say technical like head and shoulder pattern do not guarantee price action? So head and shoulders work best in uptrend because that is when it's head and shoulder. It is head. I mean, a head is not normally supposed to stand upside down. So in an uptrend, and if you see a head and shoulder in an uptrend, confirm. I can see here in July. I mean in May, confirm. If you go back to where is it now? If you go back to let me show you 20. Let me show you the weekly. If you go back to 2013 on these charts, I'll show you something now. 2013 or 2017. 2017. If you go to the details of this period, you will see that the daily chart around this period posted an head and shoulder. We posted somewhere around here and posted another one somewhere around here. Immediately, market makers see that everybody starts to sell off because head and shoulder in an uptrend, they definitely in a downtrend, yeah, you need supporting evidence. Like here, you need some other things. And definitely you're in reversal here. But if we do get what you call a divergence, then it confirms that there's trend reversal. Ethereum has been really strong, but I think it's been largely dragged down by the price of Bitcoin. And expect Ethereum to pass is that daily chart? 8,000, I think it's about 1,000. Yeah, about 3,000, 1,004. So again, just like Bitcoin, Ethereum has been all-time high. This bottom, if you get to this bottom, this would be like the shoulder of the highs of September. So the expectation is that, yeah, it's likely to try to reach this. Again, one interesting phenomenon when you're looking at the charts is when you see this kind of wick down, I say it's almost like the market's trying to when you're boxing, in boxing, when you're trying to gauge somebody. So instead of throwing the actual punch, you're throwing a jab just to gauge how far you need to punch or how far you need to go with your punch. So you're throwing a jab and the person is blocking the jab, thinking that they're just jabbing, not knowing that they're trying to size up what the length of your punch should be before you throw the actual punch. So when I see this kind of thing, what it tells me is that the market is sort of throwing a jab to see how deep it wants to go. And that's why I was saying to somebody that I think Bitcoin is going to come down to 41K or 42K at the minimum before we see another leg up, because this jab was just to test how far we could go. I mean, and you can see it. It happens every time. You can see it here in the month of May when the market threw that jab to test the waters. Then 2 other ones before eventually coming down here and throwing another one. Then another final one before the market retracted. So the one in September was even worse. It threw the jab, then went up, then threw a deeper one. So usually when you have those kind of weak downs, especially for Bitcoin, the price tends to want to revisit that particular area. So that's why I'm convinced that there will be an attempt to revisit before the price moves up. I think I've answered questions I have so far. Yeah, always God is love. I have a question. God is love. Your mic is hot.
Yes, thank you. Thank you very much.
Go ahead. Okay. Does anybody else have a question before we call it today? Okay, we're good. All right, everyone. Have a lovely weekend. I think next week is supposed to be the week before Christmas, right? Okay. Yeah, we can have a Christmas carol version. Okay, yeah, see you next week. I think we'll have one next week. A short one next week, just to see how far we've come from the wreckage of the markets this week. Have a lovely weekend, everyone, and see you next week. Bye.
Yeah, thank you. Bye-bye.
Bye.
Bye.
Thank you.